Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Okay, welcome back. So we've got the market which is up 50 points or so. We just want to very quickly put up what's happening in Asia. I think what's happening in China is interesting. It's perked up a little bit. The Shanghai Composite has picked up pace. And also maybe we should just briefly look at what's happening in the currency. The yuan, which is essentially what's traded onshore, that had broken 6.83. So maybe we'll look at that as well. The Shanghai is up about 1.4%. I think that is the day's high. And the yuan is at 6.77. So which means the dollar has actually come off a little bit from the day's highest point. And the stock market has rallied in turn. We will keep a track of this as the day goes along. But Asia flashes at the bottom of the screen indicating that it's not just China, but markets like Hong Kong, etc. have also reversed earlier losses. It might have to do something with what's happening with the yuan. The NCLAT, the Appellate Tribunal, has allowed Bhushan Power Committee of Creditors to meet and discuss a resolution plan. Ashmit Kumar is now joining in the phone line to fill us in with details. Ashmit, morning.
Morning. So there are three important takeaways as far as today's order is concerned. Number one is as far as the resolution plan itself is concerned, the COC has been allowed to meet. There was initially a stay earlier this week when the NCLAT was hearing this case. Now the COC has been allowed to meet and to discuss the resolution plan. The important takeaway here is that all three resolution applicants, their applications will be considered by the COC. And the three include Tata Steel, Liberty, as well as JSW. So all three applicants and their bids will be considered by the COC. That's the first important takeaway. The second was the NCLAT was particularly severe on the RP, on the resolution professional at the last hearing because the operational creditors were not a part of the COC, and that led to some discrepancies. Now, that has been the second correction. The NCLAT is not mincing words, has made it abundantly clear that when the COC sits again for an urgent hearing, they will be necessarily be required to accommodate the operational creditors here as well. The third part is where the NCLAT has clearly provided that the COC can go ahead and not just pick the H1 bidder, but also pick the H2 bidder. And that is NCLAT is essentially preparing for an eventuality that in case there are problems, there are problems with the H1 bidder not being able to perform with the bid, then perhaps an alternative will be available to the lenders. So that's essentially the broad takeaway here. Of course, one caveat that will need to be kept in mind is that the NCLAT, while allowing for these proposals to be considered, has clearly said that any finalization of the bidder and any finalization of the resolution process will be subject to further orders from the Appellate Tribunal. The next key date to watch for will be 1st of August. That's when the hearing resumes in this case.
All right, Ashmit. Thanks very much for that. So that's the update coming in on Bhushan Power. Let's get Ashwini in to talk about the markets now. Just to give you a brief, the Nifty is holding at 11,000 and we have the mid-cap index also, which is up around 0.3%. Bank Nifty not managing to build on gains, just about trading with a little bit of a positive bias. Ashwini, over to you then. What are you recommending, index as well as stocks?
See, 11,000 is holding on. So clearly market is in a pullback mode. But what is closer to support is the Bank Nifty, and that's kind of under the weather because HDFC Bank is lower. Now what you need to do right now, IT index is already up 250. So if the market has to move forward from 11,000, then banks have to participate strongly. And even now, I think Bank Nifty is a buy, 100-point type of stop, and it should also move higher, at least towards 27,000, 27,050. So that way, second half of the day could be better for banking. As far as individual stocks are concerned, Axis Bank is a buy with a stop of 528, target of 550. IndusInd Bank is a buy with a stop of 1880, target from 1920. And Yes Bank is a buy with a stop of 385, target of 410.
Okay. Ashwini, I had a quick question on metal stocks. If you look at the week to date for both Tata Steel and Hindalco, yes, news-based, but both the stocks are down around 10.5% week to date. How would you approach both of them? What would you tell retail guys?
See, the problem is that the way these stocks are falling day after day, maybe the market is trying to price in a reversal of the cycle. Like in this week, Tata Steel has fallen from 560 to 500. These sort of falls don't happen in large caps unless something is changing. So stay out of it. If you are in it, have some sort of stop, because even while the market goes up, metals can keep going lower. So that is a possibility. So try to avoid buying into metals till there is clarity in terms of the cycle, etc. These stocks are trading way below the 200-day moving average. Basically, they are trading like, mid caps are.
Okay, just put up Dilip Bilcon. If you can put up a monthly sort of chart of Dilip Bilcon prices the last 1 month. Ashwini, it got to about 600 rupees recent low. I mean, this is all in the last, 1 month, 1.5 months. It got to a high of about 840 odd rupees recently, and it's now back at 630. Any thoughts at all? I mean, could we get another trading bounce around the previous 600-ish kind of levels, or you think not really worth it?
See, the message of the market is clear. People are not buying into all the management talk that nothing is wrong, and the moment you got a 200-point rally, people exited. I think now it's at that 5% circuit also, so a lot of people tend to get trapped. But my sense is it will break 600 and go even lower. Things don't fall like this without a reason. Mid caps totally, buying is zero. Stock can fall under their own weight. So this is a time you stick with large caps, stick with, ETFs. Who can explain what happened from 1200 to 600? That only time will tell, and maybe too late later on.
Ashwini, do you by any chance track gold prices on charts? I mean, the local or international prices? Gold.
Gold prices?
Yeah.
See, gold prices, have been in a range for a long time. So I don't think there's great amount of, action which is happening on gold. It's about 1223.
No, there is no action actually.
Here.
Yeah, that's why I'm asking. I mean, is it I think 1220 or so international prices?
See, they've had a decline from 1360 all the way to 1200. Now, 1200 is a support, longer term support. Maybe from these levels, you could have a pullback rally that goes back to about 1260, 1280. But overall, there is no trend in gold.
Okay, well, Ashwini, we have a Twitter query, and I was reading the query which came through. It's from Dhruv, who has 1,000 shares of Eicher Motors, which is at 1790. Should he hold or sell? I don't remember when Eicher was at 1790. Even if there's one more zero added to that price and it's 17,900, in any case, what would you recommend?
Well, this is a reply to people who say you shouldn't buy stocks at high valuation. So, if he has the money to add, maybe add, because 26,000, 25,000 is very close to previous supports. So, if you can buy. Otherwise, just hang on. I think it should at some point get back to 34,000 and beyond. See, it's had such a large run that even if it spends 2 years between this 26 and 34, it won't be a big surprise. Just don't try to exit and listen to all this high valuation bullshit. The stock has ways to go.
Okay. All right, Ashwini. Thanks very much for that. So that's the view coming in on Eicher Motors. We need to take a break now, but these are the proceedings of the Lok Sabha, where the TDP MP Jaidev Gala has presented the no confidence motion against the Modi government, and the big issue is the special status for Andhra Pradesh, which has not been granted. So we'll take a break and we're going to be back soon. Welcome back. So 11,000 for the Nifty mid-cap index, also building a little bit incrementally in terms of gains, so up around 0.4% at this point in time for the mid-cap index. Rahul Arora, CEO of Nirmal Bang, joins in to discuss the fundamentals of the market. Rahul, hi. Thanks very much for joining in. Well, everyone's thinking if they can carry their own food to PVR and Inox and all of these theatres. What's your sense? You've been a long watcher of both of these stocks. Do you think that earnings are going to be hit materially once this comes through?
So thanks for having me, Ekta. I think there are two aspects to look at it. One is the valuation aspect, and then the other is the core earnings growth if this comes through. Purely from a valuation standpoint, Inox is down to single digits price to earnings on FY20. I think it's about 9.5 times. EV/EBITDA is less than 5 times. PVR, which used to be somewhere between 25-30 times price to earnings, has come down to about 18-19 times, and about 8 times EV to EBITDA. PVR's got hit more than Inox in this fall. Your specific question, yes, earnings will have to be reworked because if you see the food and beverage side of the business, that's about a 70-75% gross margin business. And the advertising part of the business is about a 90-95% gross margin business. The box office is actually the lowest. You get about 50-55% gross margins from the box office. So if almost 15 to 20% of your revenues was coming through F&B, which was a 70-75% gross margin business, and you have to cap prices or allow outside food, which is in effect telling you to control prices, it will definitely have a bearing on the earnings. The bigger problem I have, Ekta, is and this is a slightly philosophical point, is the extent of regulation that's coming into various sectors, and it's becoming difficult to call as to what the fair value should be. So you've seen a flip-flop on electrical vehicles. You've seen a flip-flop from the government on overloading with respect to Ashok Leyland. Now you have this. Obviously, the multiplexes are going to contest it, but as we were discussing with Prashant in the break, it's very difficult to ascribe a price to earnings multiple when you don't know what the earnings are going to be if you're going to have so much interference. Obviously, we will have to downgrade it if it goes against. But if you just see Q1, there have been about 3 or 4 movies in Bollywood that have crossed 100 crores. There have been 1 or 2 Hollywood movies and a couple of regional that have done well. So I don't think if you strip out Bahubali, which was obviously a once in a decade kind of a movie, if you will, the Q1 results should actually be pretty good, according to me, if you take out that effect, because the ad rates are actually going up pretty well. In fact, we're forecasting Inox's EBITDA between 18 and 20 to grow at twice the rate that PVR's does. So structurally, I think this is a non-substitutable industry. I don't think Netflix has picked up to that extent in India just yet to dent the business model. But I think if things like these pop through, it's very difficult to take a call. If you're playing it fundamentally and you have a 2 to 3 year view on this business, which is, I still think, going to be fairly nascent even 3 years out from now, I still think it's a buy, and I think it's far more attractive today than it was, say, when the last time we spoke about a month and a half back. But the regulations notwithstanding, I would still say go in and buy a PVR and an Inox even at this price, because I don't think at these valuations there's too much to lose even from here.
Rahul, but have you sort of spoken with legal experts on this entire issue? Because there are people who say, who are on both sides. They say, well, you're in the entertainment business, why should you regulate what food is available, etc.? I mean, some say this is populist. They're trying to push it. I mean, be populist with the people, and if there's no legal basis, so it'll be thrown out eventually. Have you sort of dug a little deeper? Where does it stand? So
we spoke to the managements of both the companies, and obviously they're not going to say anything, because both their numbers are not out yet in the open. But there's another way to look at this, Prashant, because if you see Inox now, especially with their new offering of Insignia and the restaurant format that they have, you can actually purchase F&B in Inox in India anywhere, even if you're not watching a movie at Inox now. So basically what you've done is you're now regulating restaurant prices. So the question is, where does this stop? To take just one word that you use, populist. So are you going to regulate hotel prices and hotel tariffs and restaurants next? I'm not saying it's a bad thing to do. I mean, paying $100 for a bottle of water may be obscene. But to what extent do you want to regulate? And as a market participant, how do I start valuing these things?
If this does come through in your conversation with the managements, can they compensate this by higher ticket prices?
You'll land up with the same issue there. At some point, they'll come and regulate that. We already have
capped ticket prices, I think, in Tamil Nadu.
Absolutely. Right? So there is flexible and dynamic pricing, which is if you charge prices at a particular, if I'm charging a particular, let's say a Dangal comes through and I charge 1,000 rupees at Insignia for a 9 to 12 show, then I cannot have differential pricing for that 9 to 12 show in different markets. 1,000 is where it's capped. So to some extent, you already have that price cap that is there on ticketing. But I don't think with the way people are coming down on this sector, there'll be too much pricing power. There'll be, if this goes through as is, I would not be surprised if our numbers get cut by 15-20%. Would it still be a buy? I think it potentially could still be a buy. But were this overhang to go away, like we've been discussing in pharma,
then there's
a short-covering rally that will come through and you'll probably recover your price.
Okay, quickly, Rahul, we're running out of time. Ashok Leyland, it's moving more towards its 52-week low as opposed to the 52-week high. Good time to probably pick it up?
Absolutely. Again, another instance of a government flip-flop on a particular policy. And I don't think investors should be penalized. I mean, I think these things, honestly, this may be a very non-consensus view and people may not say it as directly as I am on your show, but I think the government should keep in mind that this is retail investor money coming into the market. You need to be a little more decisive in your policy making and you can't just come around. Ashok Leyland was 40% higher just about 15 days back. And someone who's putting in money is his hard-earned money. But the question is, we have downgraded our numbers on Ashok Leyland. We were expecting a 14% earnings volume CAGR. That's come down to about 10-11%. Proportionately, our upside on the stock, which was about 30%, has gone down to about 15-16%. But again, Ashok Leyland is coming to you at about 12 times now. There are not too many companies at that market cap coming to you at about 12 times. The results were fantastic. I don't know if you guys had a chance to delve into the numbers, but the kind of results that they have shown, holding on to 13 straight quarters of double-digit margins, a franchise like that, which is looking to reduce its dependence on trucks, which was about 75% last year, stated policy to bring it down to 50% in the next 5 to 7 years by focusing on aftermarket, defense, spare parts and the likes, I would be a buyer. I think if you're wanting to pay the MHCV and CV cycle, even though they've lost a 4% market share to Tata Motors, again, because they did not discount, which is again a position of strength to be bargaining from. At this price, I'd be a buyer in Ashok Leyland. Any price below this, I'd just keep adding.
All right, Rahul, thanks very much for dropping by and good conversation as always. There was a flash at the bottom of the screen that the Shiv Sena has also decided to abstain from the no confidence proceedings. So that is BJD and now the Shiv Sena both. Shiv Sena is one of the largest allies of the NDA, and the way the count is going to be held is essentially members present inside the Lok Sabha. If somebody decides to take themselves out of the equation, well, that's it. The opposition may get talking points because of this, but doesn't change the equation or the strength of the BJP in the Lok Sabha to that degree. So it doesn't really alter the equation. It's just a comment on the fact that, as I said, it's maybe a talking point. The opposition will say that you couldn't get the Shiv Sena aligned with, aligned with your stand and vote against the no confidence motion in line with the BJP, but it's talking points. It's talk. In terms of actual numbers, would not change too much when the vote is actually finally held. We will take a very quick break here. We come back and we'll talk about stocks and news, and of course earnings top of mind. We'll get you a couple of previews. Back in 2. Welcome back. We started 11 o'clock with 50 points on the Nifty, and as we are getting close to the end of the show, we are still 50 points higher, no change, 11,007 on the index. Earnings, Bajaj Auto will be reporting numbers later in the day. Sonia is standing by with the key expectations. Sonia, morning.
Well, for Bajaj Auto, it's interesting. The stock is actually down 8% in 2018. But in the last 1 month, there's been a huge recovery in the stock. It went all the way from 2,700 to 3,064. That's because the last 2 months have been very good in the export market, especially for the three-wheeler segment. Bajaj Auto, in their own admission, said that a lot of markets are picking up. The Nigerian and Egyptian market, the mainstays are doing pretty well. But now newer markets like Iraq, Cambodia, etc. are picking up. So that is the reason why the street has been very optimistic. On a year-on-year basis, the numbers will look very good. So it will be a 44% revenue growth, a 56% EBITDA jump, and a 23% profit growth. But the base effect, it kicks in this time around for most auto companies, because same time last year there was quite a bit of pain. What's important is to look at it sequentially, because there will be a margin decline on a sequential basis. One, because the company has been very aggressive in pricing. They've gone ahead and cut prices in the entry-level motorbikes, and that will sort of hit their margins this time around. The motorcycle mix has been weak for them, so they've had higher number of low-margin motorcycles in the entry and executive level, so that will hit their realizations as well on a quarter-on-quarter basis. And then again, there's raw material cost pressures for the entire sector. So a couple of these issues will lead to a quarter-on-quarter decline in margins, and that would be important to track. Of course, year-on-year things will look very hunky-dory. As I said, apart from the fact that export markets have picked up, the rupee weakness will also aid the export revenues for them. So 160 basis points year-on-year jump, but important to track the sequential numbers for Bajaj Auto. Back to you.
Okay, all right, Sonia, thanks very much for that. Take a break. More on the markets once we're back. Stay tuned. Welcome back. Well, it seems as though the mid caps are picking up pace now, so it's up around 0.5%. The advanced decline ratio, however, is still sluggish. It was on the declining side throughout, and that still continues. So let's see whether it picks up enough for the dynamics or the crisscross to take place for the advanced decline ratio. Maybe there is some amount of recovery which has taken place in Asia, which is aiding in terms of sentiment. So Hang Seng, for example, is up around 200 odd points at this point in time. Well, that's all the time that we have on this show. It's a wrap on Trading Hours. Stay tuned. Halftime report up after a short break.